need to build a sturdy ship that you don't know what the journey will look like if you have to go from point A to point B, but you build it in a way that it can withstand what you understand of a storm would be like. And that's exactly how we build a portfolio when you retire. You have to, it may not be the most, fun or sexy portfolio that will get us those wonderful returns that we see online of these people taking high risk bets. But it also won't be the most stable thing that we know that inflation will erode most of the value. It's something in the middle that will withstand the storm and it will get you to your destination. You don't want the ship that just sinks halfway through because there's no more wood left. You need to make sure that it's a balance. And yes, I think that cash buffer in the beginning is great. And also, having an emergency fund, it's actually serving almost a purpose like an emergency fund, maybe just like a bit of an inflated one, so that the way we understand emergency fund being, my car breaks down, I need to pay for it, or my dog gets sick, I have to go to the vet. But in retirement, it could also serve that purpose of, sure, we're really in a bad market crash at the moment. Let's try and not touch the portfolio or touch it as little as possible, but then we still have cash to live off of. And that is just a long-term, looking 30 years in the future, a very strong strategy, but not something you have to do every year. You don't have to necessarily, for the next 10 years, have that cash buffer. It's just that in that transition period.